You know, I've spent most of my life thinking about money. Not in the way most people do, worrying about it, chasing it, trying to figure out how to get more of it quickly. I've thought about it differently. I've thought about what it actually means, what it represents, and how it behaves over time. And I've come to realize that most people misunderstand money completely. They think it's complicated. They think you need to be brilliant to make it work for you. But that's not true at all. When I was young, I thought I knew everything. I read books, I studied charts, I listened to people who seemed smart. I thought if I could just find the right formula, the right strategy, I could beat everyone else. I wanted to be clever. I wanted to outsmart the market, and like most young people, I learned the hard way that being clever isn't what matters. What matters is being patient. What matters is understanding a few simple truths and having the discipline to stick with them. That's harder than it sounds, because patience isn't exciting. Discipline isn't glamorous. And in a world that celebrates quick wins and overnight success, those qualities can feel almost old-fashioned, but I'm old-fashioned, and I'm still here. And I've watched a lot of smart people come and go. People who thought they could outsmart time. People who thought the rules didn't apply to them. They're gone now, and I'm still here. Not because I'm smarter, but because I learned to think differently about what I was doing. I learned to think about stocks, not as pieces of paper, not as numbers on a screen, but as businesses, with real people, real products, real customers. When you buy a share of stock, you're not buying a ticket to a casino. You're buying a piece of a business, and that changes everything. Most people don't see it that way. They see stocks as things that go up and down. They watch the ticker. They check their portfolios 5 times a day. They get excited when things rise and terrified when things fall, and that emotional roller coaster destroys them. It destroys their judgment, it destroys their wealth. Because they're reacting instead of thinking. I stopped reacting a long time ago. I learned to ask myself a simple question. If I were buying this entire business, would I want to own it for the next 10 years? Not 10 days, not 10 months, 10 years. And if the answer was no, I didn't buy it. If the answer was yes, I bought it and I held it. And I didn't check the price every day because the price didn't matter. The business mattered. You see, prices fluctuate. That's what they do. Markets go up, markets go down. People get excited, people get scared. But underneath all that noise, good businesses keep doing what they do. They keep serving customers, they keep making products, they keep generating value. And over time, if you own a piece of that, you participate in that value, but you have to give it time. Time is the secret. Time is what most people don't have, not because they don't live long enough, but because they don't have the patience. They want results now. They want to see their account balance grow every week. They want confirmation that they made the right choice, and when they don't get it, they sell. They move on. They try something else. I've seen it happen thousands of times. People buy a wonderful business at a reasonable price, and then 6 months later they sell it because it didn't do what they expected. Maybe it went down. Maybe it just sat there. Maybe something else went up faster. So they sell, and they buy something else, and they repeat the cycle, and they never get anywhere. I learned early on that the stock market is designed to transfer wealth from the impatient to the patient. It's designed to reward people who can sit still, who can ignore the noise, who can think in decades instead of days. And most people can't do that. Their emotions won't let them. Fear and greed. Those are the two forces that drive most investors. When prices are rising, greed takes over. Everyone wants in. Everyone thinks they're missing out. They buy at the top because they can't stand watching other people make money. And when prices are falling, fear takes over. Everyone wants out. Everyone thinks it's going to zero. They sell at the bottom because they can't stand the pain of watching their account shrink. I've felt those emotions too. I'm not immune. But I learned to recognize them. I learned to notice when I was feeling greedy or fearful, and I learned to do the opposite of what those emotions were telling me to do. When everyone was buying and prices were high, I waited. When everyone was selling and prices were low, I bought. That sounds simple, but it's not easy. It requires you to be comfortable being alone. It requires you to trust your own judgment when everyone around you thinks you're wrong. It requires you to have conviction based on facts and analysis, not based on what other people are doing. I remember times when I bought businesses that were out of favor, businesses that everyone else had given up on. People thought I was crazy. They asked me why I was buying something that was going down, and I would tell them, I'm not buying it because it's going down. I'm buying it because it's a good business selling at a price that makes sense. And then I would wait. Sometimes I waited years. Sometimes I waited through painful declines. Sometimes I questioned myself, but I had done my homework. I understood what I owned, and I knew that if the business was sound, the price would eventually reflect that. It always did. Not on my timeline. The market doesn't care about my timeline. But eventually, the other thing I learned, and this took me a long time, is that simplicity beats complexity. When I was younger, I thought I needed to understand everything. I thought I needed complicated models and formulas. I thought I needed to predict the economy, predict interest rates, predict what the market would do next quarter. But I don't predict. I don't know what the market will do next quarter, and I don't know anyone who does. What I do know is that good businesses tend to become more valuable over time. I know that if you pay a fair price for quality, you'll do well. I know that if you're patient and you don't do stupid things, the odds are in your favor. That's it. That's the whole strategy. It's not exciting. It's not complicated, but it works. And it works because most people can't stick with it. They get bored. They think they need to do something. They think activity equals progress. I learned that doing nothing is often the best thing you can do. Just sit there. Just hold what you own. Just let the businesses do their work. Let time pass. Let compounding happen. Compounding, that's the most powerful force in investing, maybe in all of finance, but most people don't understand it. They hear the word, they nod their heads, but they don't really get it. They don't understand what it means to let something grow, not for a year or two, but for decades. Let me try to explain it the way I think about it. When you own a good business, it earns money. And if management is smart, they take that money and they reinvest it back into the business. They make it better, they expand, they improve, and then the business earns more money. And they reinvest that, and it earns even more. Year after year, the business gets stronger, and your ownership in that business becomes more valuable. Not because you did anything, you didn't trade, you didn't analyze, you didn't stress, you just held on. You let the business do its thing. And over time, something magical happens. The growth accelerates. Because you're not just earning returns on your original investment, you're earning returns on all the previous returns. That's compounding. And it doesn't feel like much in the beginning. The first few years you might think, this is boring. Nothing's happening. But if you stick with it, if you give it 10 years, 15 years, 20 years, the results become extraordinary, not because of anything you did, but because you allowed time to work. I've seen this happen over and over. I've owned businesses for 30 years, 40 years, some even longer. And the difference between holding something for 5 years versus holding it for 30 years isn't just 6 times the return. It's exponentially more because of compounding. Because you never interrupted the process. You never stopped it and started over. That's what most people do wrong. They stop and start. They think they're optimizing. They think they're being smart by moving in and out. But every time you sell, you stop compounding. You reset the clock. And you're probably paying taxes too, which makes it even worse. So you end up with less, not more, even though you worked harder and stressed more. I learned to do less. I learned to be lazy, in a way. I found good businesses. I bought them at reasonable prices and I held them. I didn't check prices obsessively. I didn't worry about quarterly results. I knew what I owned and why I owned it. And I trusted that quality would win over time. And you know what? It did. Not every investment worked. I made mistakes. I bought things I shouldn't have. I missed things I should have seen. But overall, the approach worked because it was based on sound principles. Own good businesses. Pay fair prices. Be patient. Don't do stupid things. Don't do stupid things. That might be the most important rule. It sounds obvious, but people violate it constantly. They chase hot stocks. They buy things they don't understand. They use borrowed money to amplify their bets. They panic and sell at the worst times. They get greedy and buy at the worst times. I've tried to avoid stupidity more than I've tried to achieve brilliance, because avoiding stupidity is more reliable. If you can just avoid making big mistakes, if you can just stay rational when others are losing their minds, you'll do fine. You don't need to hit home runs. You just need to avoid striking out. Over the years, I've developed a few simple filters. I ask myself, do I understand this business? Can I explain what it does and how it makes money? If not, I don't invest. I don't care how much other people are making. I don't care if everyone says it's the next big thing. If I don't understand it, I stay away. I ask, does this business have a sustainable advantage? Is there something about it that makes it hard for competitors to replicate? Is it the brand? Is it the cost structure? Is it the network effects? If there's no moat, If anyone can come in and do the same thing, I'm not interested. I ask, is management trustworthy? Are they treating shareholders like partners, or are they treating us like marks? Are they allocating capital wisely, or are they empire building? Are they honest about challenges, or are they always spinning? I've learned that integrity matters more than intelligence in management, and I ask, what's the price? Even a wonderful business is a bad investment if you pay too much. I'm willing to pay fair value for quality. I'm willing to pay a bit more for exceptional quality, but I'm not willing to pay any price just because something is good. Price matters. It always matters. Those are my filters. Simple questions, nothing fancy, but they've kept me out of a lot of trouble over the years. They've helped me avoid fads and bubbles and things that looked good but weren't. And when I find something that passes all those tests, I buy it, and then I hold it, and I try not to think about it too much, because thinking about it, watching it, worrying about it doesn't help. It usually hurts. It tempts you to act when you should be still. The hardest part of investing isn't finding good opportunities. It's sitting still once you've found them. It's resisting the urge to meddle, to optimize, to react to every piece of news. The hardest part is trusting your original analysis and giving it time to play out. I've made my best returns on investments I almost forgot I owned. The ones I didn't check, the ones I didn't fuss over. I just held them and let them compound. And years later I'd look at them and be amazed at how much they'd grown. Not because I was brilliant, but because I was patient. You know, people often ask me for advice. They want to know what to buy, they want tips, they want me to tell them the secret, and I tell them there is no secret. The principles are simple. The execution is hard because it requires you to go against your nature, to be patient when you want to act, to be greedy when others are fearful, and fearful when others are greedy. I tell them to think long-term, not next quarter, not next year, but decades. I tell them to imagine they can't sell for 10 years. Would they still want to own what they're buying? If not, they shouldn't buy it. I tell them to ignore the noise, turn off the TV, stop reading predictions, stop listening to people who claim they know what's going to happen next. Nobody knows. The future is uncertain. It's always been uncertain, but good businesses navigating uncertainty tend to do fine. I tell them to focus on what they can control. You can't control the market. You can't control the economy. You can't control what other investors do, but you can control what you buy. You can control what you pay. You can control whether you panic or stay calm. Focus on those things, and I tell them to be humble. Recognize that you'll be wrong sometimes. Recognize that luck plays a role. Recognize that other people have good ideas too. Don't get arrogant. Don't assume that past success means you've figured everything out. Stay curious. Stay skeptical of your own beliefs. I've been doing this for a long time now, longer than most people reading this have been alive, and I've seen everything. I've seen booms and busts. I've seen panics and manias. I've seen fortunes made and fortunes lost. And through it all, the same patterns repeat. People forget. They think this time is different. They think they found a new paradigm. They convince themselves that old rules don't apply. And then reality reasserts itself, and they learn the hard way that the old rules still apply. They've always applied. The rules are simple. Value matters, quality matters, price matters, time matters, patience matters, discipline matters. These things mattered 100 years ago. They matter today, and they'll matter 100 years from now, because they're based on how businesses work and how human psychology works. And those things don't change. Technology changes, industries change, products change, but the fundamentals of investing don't change. You're still trying to own good businesses at fair prices and let them compound over time. That's it. Everything else is commentary. I wish I could tell you something more exciting. I wish I could give you a formula that would make you rich quickly, but I can't, because it doesn't exist. What exists is a simple, boring, effective approach that works if you have the patience to let it work, and most people don't. Most people will read this or hear this and nod their heads and then go right back to checking prices every day, buying things they don't understand, following the crowd, making the same mistakes. Everyone makes, because knowing what to do and actually doing it are two very different things. Doing it requires courage. It requires you to be comfortable being different. It requires you to stand apart from the crowd, to think independently, to trust your own analysis even when everyone else thinks you're wrong. That's uncomfortable. It's lonely sometimes. But that's where the returns come from. Not from doing what everyone else is doing, but from doing what makes sense even when it's unpopular. From being patient when others are impatient. From being rational when others are emotional. From thinking in years when others are thinking in days. I'm in the final stretch of my life now. I've made more money than I ever thought possible, not because I'm a genius, but because I understood a few simple things and I stuck with them. I didn't get distracted. I didn't get clever. I just stayed the course. And now, when I look back, I realized that the money itself was never really the point. The point was the freedom it gave me. The freedom to think clearly, to make choices based on what I believed was right, rather than what I needed to do to survive. The freedom to be patient because I didn't need quick results. Money is a tool. It's a means to an end. And the end for me was always the same. The freedom to live life on my own terms, to spend time thinking about things that interested me, to be independent. But to get there, I had to think about money in a way that most people don't. I had to see it not as something to chase, but as something to cultivate. Like a garden, you plant good seeds. You give them time. You don't dig them up every week to check on them. You just let them grow. That's how I think about money. That's how I've always thought about it. And it's served me well. Not because I was smarter than everyone else, but because I was more patient. Because I understood that time is the friend of the good business and the enemy of the mediocre one. Because I learned to sit still. If there's one thing I hope people take from my experience, it's this. Investing isn't about being brilliant. It's about being sensible and patient. It's about avoiding mistakes more than hitting home runs. It's about understanding what you own and why you own it. It's about letting time work in your favor instead of fighting against it. The world will always be full of noise. There will always be people predicting the next crash or the next boom. There will always be hot new things that everyone says you have to own. There will always be fear and greed pulling you in different directions. But if you can tune that out, if you can focus on the basics, if you can be patient and disciplined, you'll do fine. You'll do better than fine. You'll build wealth slowly, steadily, surely. And you'll sleep well at night because you'll know what you own and why you own it. That's all it takes. Simple principles applied consistently over a long period of time. Nothing fancy, nothing complicated, just patience and discipline and common sense. That's how I think about money. That's what I've learned in a lifetime of investing. And if I had to do it all over again, I wouldn't change a thing.